Banks attack crypto yield. God forbid us regular folks earn a little bit of interest or yield from somebody other than the banks. And we knew this is no surprise for us that have been paying attention here in the digital asset space, the attacks from the banks, Wall Street, regulators, you name it. And finally, we're starting to have some breakthroughs, but the banks aren't giving up yet. We're going to break it down. Got the CPI released here today. Markets are moving back up. New all-time highs again for gold and silver. And so here's the full market update. And we'll be back live tonight at 10 p.m. Eastern for a full market update with a Q&A session as well. Let's get into it. Kobesi letter. December CPI lie comes in at 2.7%. in line with expectations of 2.7%. But core comes in at 2.6, below expectations of 2.7. Both headline and core CPI inflation were flat in December. Rate cuts are set to be paused at the January Fed meeting. And so this was in line with expectations. It's showing that inflation is cooling off. We still have some present, but at least, we're not moving, higher with the inflation levels that we've been watching. And the market is responding well to this news. Now, I don't think that we're going to get a rate cut in January. This inflation report, although it's decent, probably not going to get it. And then we are going to be talking here about the drama with the Fed right now. Another reason why we probably aren't going to get a rate cut here this month of January. But the market is reacting positive to this news with Bitcoin pushing back up towards 94,000. We hit 93,750. And then we have XRP also moving up as well, all the way up to about $2.11 this morning, 208 as I record this update. But a nice bounce on the markets here this morning. Terra Trades has the update. Nice bounce on XRP right at the $2.04 level. This was posted yesterday, but shows the structure and the direction that we could be heading in. Price is now above the moving average and looks like the RSI broke up too. It still needs to break above the $2.11 level to start to confirm the next wave. So we just rejected off the 211 level, right? That's what we're going to need to break through to confirm that we're moving back up, targeting a double top around 240 to 243, which is the level that XRP went to just here recently. We'll take a look at it right here on the chart right there. Okay, so I'm on the 15-minute chart zoomed out, so this chart looks a little zoomed out right now, but you get the point. Need to break through 211 to confirm we're making that move towards that double top on the short-term time frame. Now, gold hitting another new all-time high here today, up at $4,600 per ounce. Silver, same thing, up at $89 per ounce. And if you guys want the full scoop on the commodity supercycle, I dropped a fantastic interview with Jay Martin, the president of VRIC Media and host of the Vancouver Resource Investment Conference. That was dropped this morning. Go check out that conversation, just shy of an hour long, on commodities and investing principles. I am so excited to be attending this conference here at the end of this month. It takes place January 25th and 26th. We're going to be having a private meetup for our community the day before on the 24th, that Saturday. Really looking forward to it. Just so much wisdom when it comes to investing in all assets, not just commodities, not just gold and silver. And I'm excited. The reason why I get so excited up there is this merging of the commodities and the digital asset space. A lot of conversations now up there about tokenization and how crypto actually does play a role in the portfolio as well. So check that one out. President Trump responding to Fed Chair Jerome Powell. Okay, got a little bit of drama here with the Federal Reserve. President Trump says he's either incompetent or crooked. He doesn't do a very good job. And this is in response to the recent activity that we've been watching.
Well, he's billions of dollars over budget, so he either is incompetent or he's crooked. I don't know what he is, but he certainly doesn't do a very good job.
President Trump also calling for rate cuts as well. And as I said yesterday in the update, people say, stay out of politics. And I responded and I said, commenting on the Federal Reserve is not political, right? Having a group of private central bankers ruling over our monetary policy is something that all Americans, no matter what side, how you identify, We should have a conversation about that and the real cause and root of the inflation problem that we're up against. We really should address that, all sides of the aisle. Metalaw Man responds here. It's a little he said, she said dispute. This is Janine Pirro, the U.S. Attorney General, disputes Jerome Powell's claim that the Department of Justice threatened to indict him. At this point, good corporate governance would require that the Fed board to appoint a committee and retain an independent law firm to investigate whether their chairman lied to Congress and or to the American people. This is what any public U.S. corporation would do. Well, there's the problem right there, is that we're dealing with a private cabal of bankers. This is the statement from U.S. Attorney Janine Pirro. The United States Attorney's Office contacted the Federal Reserve on multiple occasions to discuss cost overruns and the chairman's congressional testimony, but were ignored, necessitating the use of legal process, which is not a threat. The word indictment has come out of Mr. Powell's mouth, no one else's. None of this would have happened if they had just responded to our outreach. This office makes decisions based on the merits, nothing more and nothing less. We agree with the chairman of the Federal Reserve that no one is above the law, and that is why we expect his full cooperation. So, Powell's the one that used the word indicted. He's the one that's saying that this is political, along with the mainstream media, suggesting that this is all about, politics and President Trump wanting Powell and the Fed to bring down rates, which obviously I think that there is a part of that, right? But the big issue here is that we have no oversight, we have no audit, and many people don't even know what the Federal Reserve is and why it does control our monetary policy and plays such a critical role in this inflation problem that we're addressing right now, that we're trying to solve, right? We had the inflation numbers come out this morning. What's the root cause of this, right? It's a combination of government spending that is only possible and capable because of the Federal Reserve monetary policy. So I am a free market capitalist. I think that we shouldn't have the Federal Reserve setting interest rates. And I believe that the monetary policy should be determined by our Treasury as it was written in our Constitution. That's my stance. It's not political. It's just getting back to how this country should be ran. Speaking of how this country should be ran, the banks, the same banks that are involved with the Fed, are now stepping in to protect their own interests when it comes to stablecoin yield and coming after our digital asset space. Eleanor Terrett points out an interesting note here from the draft that came out yesterday. This is the Market Structure Clarity Act, and the markup vote is due on Thursday. The text got released last night at midnight, and so I've started to dive through this, but let's point out a few things here. Interesting section giving some tokens classification as non-ancillary assets based on their inclusion in exchange-traded products as of January 1st, 2026. It says that if a token is the main asset of an ETF listed on a national securities exchange and registered under Section 6 of the Securities Exchange Act as of January 1st, it will not be required to file disclosures that other tokens are required to file. In other words, under this bill, XRP, Solana, Litecoin, HBAR, Doge, and Link are treated the same as Bitcoin and Ethereum from day one. So, complete clarity for XRP and a few of those other assets that had an ETF or ETP as of January 1st, 2026. Okay, so this clarity, this bill, as written, there's a lot of great things, and we have to acknowledge that. We are moving in the right direction. We're still way behind. There's some things here. I'm about to address the yield problem next. There's some things that we definitely don't like, but we're moving in the right direction. We are late. There's some problems, but let's get it across the finish line and let's get it done so that we can get full institutional adoption. We can see innovation thrive. Free market capitalism in America. Let's restore it. That is my position, and that's why I think it's so important that we get this bill passed. Now, here's the specific section on stablecoin yield and how they are trying to ban it. Go to page 190 when you're looking at the full text. It's 278 pages total. But if you go to page 190, this is the section that we're talking about. Prohibition on interest. In general, a digital asset service provider may not pay any form of interest or yield, whether in cash, tokens, or other consideration, solely in connection with holding of a payment stablecoin. So if you're just holding it, not doing any other activity, they want to ban a digital asset service provider from giving you interest or yield on that stablecoin. Permissionable activities. The prohibition under paragraph 1 shall not apply with respect to an activity-based reward or incentive, including any consideration, reward, or benefit in connection with. So these are the activities where you would be able to earn an incentive, interest, or reward. A transaction, a payment, a transfer, a conversion, a remittance, or settlement activity. The use of a wallet, account, platform, application, protocol, or network. Membership or participation in a loyalty, promotional, subscription, or incentive program. Acceptance, settlement, or acquiring activity, including a rebate or incentive provided in connection with the acceptance or use of a payment stablecoin. Providing liquidity or collateral, or governance, validation, staking, or other ecosystem participation. So you would be able to earn rewards, yield, or some interest for those types of activities. Providing liquidity, a sign-up bonus, right? You sign up to a platform, you'll be able to earn some rewards, but they are stopping you from being able to earn interest or yield for simply just holding a stablecoin. So you can earn interest or yield if you have a CD with the bank or a savings account with the bank. But if you have a savings account or savings or holdings with a stablecoin issuer on an exchange or other platform, that digital asset provider cannot provide you yield, interest, or any rewards on that. So the way that you're going to be able to earn yield, right, is in engaging in these types of activities that were listed here. Liquidity, staking, engaging in governance, and platforms will be able to give you rewards or rebates for some of these activities that are mentioned. That's how you will be able to earn yield, not just on stablecoins, but on other digital assets as well. But the banks have drawn the line in the sand, and they do not want you to earn yield on your stablecoin. Now, the problem that I have with this is, well, there's a few, but primarily the fact that this is the safest way for you to earn yield or interest on any digital assets right now. Right? You can earn yield by providing assets to liquidity pools or staking, right? But the safest way is to hold an asset that's pegged to $1, that's, the digital asset provider or issuer is holding T-bills or treasuries on the back end, and they're then turning around and giving you a cut of that yield and interest that they're earning for holding the T-bills. This is the most simple model. It's the same model that the banks use. And the stablecoin issuers are trying to apply the same model to be able to provide yield or interest on stablecoins. And it's the safest way for you to earn yield on digital assets. You're holding a stablecoin that, as long as it doesn't depeg, should maintain its value. And you're earning a consistent yield and interest. Where does the yield come from, right? That's the big question in crypto and DeFi. Where does the yield come from? A lot of people can't explain where the yield's coming from. In this case, we know it's very clear, right? It's interest earned off the T-bills that the issuer of the stablecoin is passing on to you. It's the most simple, clear-cut, and safe model. But the banks can't have that happen, can they? So we're going to wait to see. This was the draft version of the bill. The final version and markup is set to take place on Thursday. One of the committees has moved their markup vote till the end of January, but we have Senate Banking and Senate Ag. I can't remember which one is due to markup on Thursday and which one moved it to the end of the month. You guys can clarify it for me in the comments down below. But those are the two committees, Senate Banking, Senate Ag. They're going to do markups this month. One of them is going to do it Thursday, one the last week of January. And then after it moves out of committee, it'll move to a full Senate vote. After the full Senate vote is approved, they may have to reconcile with the version of the bill that the House passed. Once the reconciliation is done and both chambers pass that final version of the bill, then and finally it moves off to President Trump's desk for signing into law. So there is no chance that this gets passed in January. It's just not going to happen. SEC Chair Paul Atkins, though, yesterday made the comments that he's expecting this to be passed in the next few months. Eleanor Terrett has also commented that the earliest that this could probably pass would be in the next few months. So we're probably looking at about March, April timeframe for this bill being passed. And it is my opinion, don't tune out or check out now. Don't get bummed now. I mean, there's some things to be upset about. But it is my opinion, just speaking on markets and price action, that we will absolutely see price appreciation on XRP and the broader crypto space before the Clarity Act gets signed. Time after time, again, we see these events play out with a buy the rumor rally leading up to the event and then a sell the news drop taking place. That's exactly how I've said it'll play out. I still hold to that. Now it looks like our time frame extends out to March, April at the earliest, where this bill could be signed into law. So between now and then, let's look for that rally. Let's take advantage of it. There's still so much opportunity and money to be made right now. So let's keep you up to date. Stay tapped in by subscribing, hitting that notification bell if you appreciate these videos. Help us out by liking it, sharing it out far and wide. All of our community resources are available at ZachRector.com. And come on back tonight for the live show at 10 p.m. Eastern. Can't wait to see you there. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.